Hey guys, it's the end of the trading week, beginning of a long 3-day holiday weekend. So hopefully everybody had a good trading week and that we can all relax and be stress-free going into the weekend. It's 5:18 p.m. It's Thursday evening. The markets are obviously closed. And, overall good day in the market. I think we had a strong finish to the week. We had about 3 days, both Tuesday, Wednesday, Thursday, were green days in general, depending on what stocks you had, but overall for the market, the big names were in the green. Facebook took a hit again today after it had a big rally yesterday, so maybe this is some profit taking, or maybe just some more downward news based on advertising, people pulling advertising from Facebook, but who knows. I don't have any stock in Facebook or any options plays in Facebook. I've never played Facebook, but we'll have to see how that shakes out this coming holiday weekend and how it opens up Monday morning. But, AMD was pretty quiet, down 0.5%. Micron also up 0.3%. So both pretty much traded sideways. So as you know, if you watched my previous videos from this week, the only option play that I still had currently open was a put on Disney at the $100 strike price. And that's because I initially had opened a strangle on Disney early in the week. But if you saw my video for last night, I closed out my Disney 115 uncovered call, naked call, because Disney was around 113, hovering around 114 yesterday. It was getting a little bit too close for comfort, so I just didn't want to deal with it. And in all honesty, it was stressing me out way more than any of my cash secured puts or covered calls ever have. So I just didn't want to deal with it. I didn't want that headache. And I especially didn't want, to get assigned or, go have that trade move against me going into the long weekend. So I just didn't want to deal with it. So I did buy it back to close the position. And I still profited. I initially sold it for $50 for the contract, and I bought it back yesterday for $35. So I still profited $15, and, profit is profit. So I'm not mad about that. So I only had the $100 put on Disney, which was cash secured, that expired today, and clearly Disney is above $100. It's ended the day at around 112.18, so that expired worthless. But as you can see, we opened up green and then we just bled off, had a little bit of a rally kind of midday, traded sideways, and then during power hour we really just sold off. And actually the whole market kind of sold off a little bit during power hour. Let's take a look at IWM. So something similar happened with IWM, where it opened up green, had a strong kind of sell-off, rallied a little bit midday, traded sideways, and then starting around 3 p.m. it just dipped, and then 3:40 hit hard, rallied a little bit right before it closed, but in the last 20 minutes of market trading, it went from 142.76 to 142, so it dropped almost $1 within 20 minutes. So we'll have to see. If I do want to maybe open up a position on IWM come Monday morning, I would have to probably get in. The premiums on IWM right now are actually really juicy. So I could probably get in like high 130s if I wanted to get like a 0.4 or maybe 0.3 or 0.2 if I want to be extra conservative. But, not a lot of like crazy news that happened this week, even though cases of the illness were spiking in states like Florida and Arizona, which is what I was expecting that stocks would drop. I didn't think the market would, react favorably to that news, but who knows? The market's the market. The Fed keeps printing money. So let's just take a look at SPY. So one interesting thing is, if you saw my video from yesterday, you saw how I correlated the day that the Federal Reserve kind of dialed down the printing of money, which was June 10th, and how SPY reacted. And I drew kind of this quick line saying that SPY hasn't hit that peak. So just as a quick and dirty estimate, here's the peak of SPY, June 9th, the day before the Fed turned off the printer, or at least, made it go slower or print less money. And, we're not close. We're still about maybe $10 away or so from the high of SPY. So it's going to be interesting to see if we ever get back to that peak, because if we take a look at that Federal Reserve chart, we're still not, we haven't increased or ramped up printing of money. That peak was like 7,168,936, and the last recorded number was 7,082,302. So, maybe we're not going to hit that SPY, 323 or 320 range unless the Fed ramps their printing of money back up. But we'll see. I had drawn this quick trend line yesterday based on the numbers at where SPY closed yesterday, and you can see we've broken above that trend line, which if we have a confirmation day on Monday, maybe we will come close to testing that or even surpass it, but we'll have to wait and see. We can just enjoy ourselves this weekend and see what happens Monday, not worry about it. But let's take a look at Disney. So I had a play on this clearly, and I was super safe. I wasn't concerned about my strike getting tested because I played it very conservatively. But Disney was kind of up and down the past 2 days, almost trading sideways, because for the past 3 days it's been flirting at like 111, 112, 113, 114 in that like $3-4 window. So I'm happy with that. I probably, I got burned a little bit on Disney. I didn't really get burned, but I didn't get max profit, and I didn't really like playing Disney. I'll be honest with you, it was just stressful this week. So maybe come Monday, I'll stick to my guns and stick with like the semis, like AMD and Micron. I haven't played AMD in a while actually, so maybe I'll get back to my roots. Maybe I'll think about getting to IWM as well because the premiums are a little juicy on that. So I'll have to wait and see what happens over the weekend. Sunday night after hours trading, see how the futures are looking. We'll just keep an eye on it. Let's just take a quick look at what the popular options that were traded today were. So again, Tesla was very popular. Tesla again, Tesla hit 1,200 today, up almost $90. Crazy, just crazy. And again, people are mostly bullish with 55% calls, 45% puts. But again, big tech, right? Tesla, Apple, Neo, Facebook, Amazon. So look at Facebook. Facebook dropped $4 or a little over $4. And people are also still a little bit bullish, right? 56 calls, 44 puts. Let's see, AMD fell a little bit. It's still popular, but not quite as popular today. But still, look at this ratio: 28% put, 73% call. So people are very bullish on AMD and also on Nvidia, right? Another semiconductor stock. But I would play Nvidia, but look at it. Its price is multiples higher than Nvidia. You would need $38,000 to sell a cash you could put on AMD, which I don't have in my account yet. Hopefully, right? Yet. But again, Netflix is up there. Here's Micron again. People again bullish on Micron, 35.64. So I'm really liking the semiconductor sector right now. I feel like they're poised for a good future because more and more tech is being utilized in the country, and all that tech is going to require semiconductors and microchips and things. So I'm really bullish on the semiconductor sector as a whole. So I'm really liking that SMH. Maybe I'll play an SMH play come Monday morning, the Van Eck semiconductor ETF. So just take a quick look to see how that did today. But the premiums on that were also pretty juicy from what I remember. So traded pretty much sideways. Opened up the green, traded sideways, which is fine. 15,000 is what would be required roughly for a cash you could put. But let's just see if I wanted to sell put for next Friday. Yeah, still has pretty good premiums. If I sold it at the money, $223 in premium is nothing to sneeze at. So I'm really liking SMH. Maybe I'll make a play on SMH if things are looking favorable come Monday morning. So let's take a quick look at some of the stock graphs I came across today. So here's an interesting graph. So this is showing the flow of money essentially in the various forms of ETFs. So this is percent share of rolling 3-month ETF inflows. And you can see that people have been taking money out of the government ETFs and into corporate ETFs. And specifically, people are really piling their money into the sector-specific ETFs. So these would include things like SMH, like the semiconductor sector, or XLF, which is the financial sector, or XLK, which is the tech sector in terms of the S&P 500. So that's interesting, and that's also kind of like where I'm theoretically leaning right now, because I'm playing also kind of sector-specific stocks by playing AMD and Micron, SMH. So that's interesting. I'm kind of following the crowd, or the crowd is following me. Probably the former is more likely. But also people are getting the precious metals, right? So people are trying to get into gold and silver because if they think that we're going to have inflation, you got to get into the hard metals like gold and silver to protect against inflation. So people are piling their money out of stocks into those precious metals. People are looking into like high yield ETFs and investor grade ETFs as well to a lesser degree. But you can see government ETFs have pretty much plummeted and sector specific ETFs have skyrocketed. So that's interesting. And then here is a graph showing, so this is referring to unemployment, but this is showing specifically the percentage of people that are unemployed that are not temporarily laid off, meaning these are people that have permanently lost their job. So you can see, compared to our previous recessions, the unemployment numbers, for example, during the tech bubble, were between 30 and like low 30s to low 40%. Okay. During the Great Recession, we were between like high 30s and low 50%. Right now, we kind of started the illness response a little below 30%, and we're currently right now we're actually low. We're only at around 21%. So we did rebound because we got as low as 10%, because I'm assuming the vast majority of people were considering themselves temporarily laid off. We'll have to see where this graph goes, because if it does get back into like the above 30 range, that's when we had our prior recessions, which would be concerning. But have to wait and see. I would say this is actually somewhat bullish news because we're not at the levels that we were during the prior recessions. So I wouldn't say this is bearish. I would actually say this is good news in my opinion. So let me know how your trading week went. Let me know if it went in your favor. How much did you profit? Or more importantly, what was your percent profit? Let me know if you have any interesting or nice plans for the long holiday weekend. As always, please stay safe. If you're in one of those states that are getting hit hard right now, please stay safe, wear a mask, and keep yourself safe, but also your friends and family and your neighbors and just the rest of your community. And if you have any questions or comments, like always, leave them below, and happy trading.